Hi everyone, welcome back to my channel. I've shared about what technical analysis is and a bit about understanding charts. If you're new to technical analysis, I suggest watching these videos first. In these and upcoming videos, I am going to talk about technical indicators. Of all the indicators to learn and master, supports and resistances are the most basic yet most difficult and important. Let's start with support. Support is a level around which it's difficult for price to fall further. Why? Because around that level, the asset appears cheap, so there are more buyers than sellers. And when there are more buyers than sellers, the price cannot fall much lower and usually rebounds. Note that I use the term around. A support is never an actual figure. It is a level around which price stops falling and usually rebounds. We can use a band to identify a support range called a demand zone because there is demand in this zone, or a best fit line. In my practice of technical analysis, I use a best fit line. Using the example of Intel from December 2017 until February 2018, we can see that every time Intel fell, the downside stalled around 42.39 before rebounding. This occurred 3 times. This support continued to be valid in late October 2018 when price fell sharply but bounced off the support around 42.39 and rebounded the next few days. This support also worked fairly well in late May 2019. Although price did not touch 42.39, someone who used this support to predict a bottom and a rebound would have been rewarded. And this support again worked well in May 2022. But what happens if a support breaks? Like this. Now when I say break, I mean price close below it. If a support breaks, it is a bearish signal and price is expected to fall to the next support level. That level for a brief period of time was around 35.54 until it was broken again. That led Intel lower to the next support around 24.66, which held back declines twice and bounced Intel higher. What happens to the support level that was broken? It becomes a resistance, which we will go into now. Resistance is like the ceiling. It is a level around which it's difficult for price to rise further. Why? Because around that level, the asset appears expensive, so there are more sellers than buyers. When there are more sellers than buyers, the price cannot go much higher and usually declines. Again, I wish to highlight that a resistance is not an actual figure. You can choose to use a band to identify a resistance range called a supply zone because there is supply in this zone, or like me, use a best fit line. I'll use gold as an example. This is a cross that I have covered in my weekly technical analysis outlook videos. Please watch that video if you're interested. The best fit line for gold's resistance was at 3435.63. You can see that this level rejected gold lower 4 times this year. But when gold closed above this level on the 29th of August, it extended its upside to the next resistance level. Now you might ask, gold is already reaching new all-time highs. There is no precedence for the next identification of next resistance. I will show you my method in future videos. Generally, if price closes above a resistance, it usually goes higher to the next resistance, and the resistance that was broken now becomes a support. Now let's talk about moving averages. A moving average is simply the average price of an asset over a certain number of periods, say 20 days, 50 days, 100 or 200 days. It smooths out the noisy ups and downs of daily price movements so that you can spot the trend more easily. The most common one is the simple moving average. The formula is pretty simple. Add up the closing prices of the last X number of days, then divided by that X. For example, if you want a 10-day moving average, sum up the last 10 daily closings and divide by 10. But that's just academic knowledge. Now with trading platforms that provide live charts and technical indicators, all you need to do is select a specific moving average. There is also the exponential moving average, which gives more weight to recent prices, making it respond faster to price changes. But to keep things simple, we will just be using the simple moving average in this video and future videos. Moving average can also act as support or resistance. When price falls to a moving average, which is now a support, the expectation is that price bounces higher. If price closes below the moving average, then the expectation is that price goes lower and the moving average is now a resistance. Similarly, if price rises to a moving average, which is now a resistance, the expectation is that price gets rejected and goes lower. If price closes above the moving average, then the expectation is that price goes higher and the moving average is now a support. Using sterling dollar as an example, we can see that sterling dollar made 5 attempts to break above the 20-day simple moving average, which acted as a resistance, but all attempts ended in rejections. But once sterling dollar closes above the 20-day moving average on the 10th of March 2023, this resistance is considered broken and price advanced. The 20-day moving average was then considered to be a support. Along the way, declines bounced off the 20-day moving average several times, albeit with just one false break, which I hope to cover in future videos, to extend the advance. So in this case, moving average can act as signals. Closing above it is a bullish signal, closing below it a bearish signal. Another popular method in identifying support and resistance is using a trend line. A trend line is a straight line, whether upward sloping or downward sloping, that crosses at least two lows or highs, the more the better. A trend line that crosses the lows is called a support trend line, and if it crosses the highs, it's a resistance trend line. In a downtrend, the resistance trend line is more important and is used to identify breakouts, which signals a potential change from a bearish trend to a bullish trend. When price rises to the resistance trend line, the expectation is that price gets rejected and goes lower. If price closes above the resistance trend line, then the expectation is that price goes higher, which is a signal that the bearish trend has changed into a bullish trend. In an uptrend, the support trend line is more important and is used to identify breakdowns, which indicate a potential change from a bullish trend to a bearish trend. When price falls to the support trend line, the expectation is that price bounces higher. If price closes below the support trend line, then the expectation is that price goes lower, which is a signal that the bullish trend has changed into a bearish trend. A support is a level around which price finds difficulty in going lower and usually leads to a rebound. Closing below a support usually leads price action lower to the next support, and the initial support becomes a resistance. A resistance is a level around which price finds difficulty in going higher and usually leads to a rejection. Closing above a resistance usually leads price action higher to the next resistance, and the initial resistance becomes a support. Supports and resistances are not round figures. They can be viewed as zones or as a best fit line. Moving averages smooth out price trend over a specific period of time and can act as support or resistance. A trend line is a straight line, whether upward sloping or downward sloping, that crosses at least two lows or highs, the more the better. If resistance trend line is broken, price is expected to go higher. If support trend line is broken, price is expected to go lower. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.